My name is Tyler. Welcome back to the channel. Today, guys, we're talking about AMC, and we're going to be looking at this very bullish article and this very bearish article, both from the Motley Fool. The one was posted April 5th, and the other was posted today, April 11th. So I think there's good points to point out in both of them, but you're going to get my opinion after. And then after all that, I'm going to be giving you guys some technical analysis and some price action to look forward to going into next week. Also, guys, all I ask in exchange for these videos is that you hit the like button, subscribe, and comment down below. I respond to every single comment. Now, with that out the way, let's get into it. We are going to look at the bearish article first by Sean Williams, and viewer discretion is advised if you are a big AMC fan, because he throws blows at every single person and you may be insulted. But it is good to hear a negative point of view and a positive point of view if you are trading something or you are invested long term in something. So this is really why I feel the need to bring this video to you guys, is to share the light on both sides, because there are good points, like I said, on both sides. So I really don't want to read all this. He's basically talking about the retail traders, how they targeted GameStop and AMC is arguably the most polarizing. So basically just going over kind of a little bit of what happened. There are no shortage of reasons the Wall Street Bet army of investors believes AMC will head higher. Chief among them is the idea that it'll undergo yet another short squeeze, which could be even larger than the one that sent shares from $2 to $20 in a matter of days earlier this year. As of mid-March, data from Morningstar showed that 49.3 million shares of AMC were sold short. That's up about 1.2 million shares from mid-February. The hope here is that one or more good news events could cause pessimists to head for the exit, pushing AMC share price higher. Of course, with AMC's short ratio plummeting in recent months, a sustained short squeeze looks extremely unlikely. So keep in mind, this Sean guy is setting the stage to completely unload on AMC. So I'm going to continue on. It says enthusiasts have rallied behind AMC's capital raising efforts. As well, according to CEO Adam Aron, the company raised $2.8 billion via share offerings and debt capital since the pandemic began. In the company's fourth quarter earnings report, the company noted that it had more than $1 billion in cash available. It really starts to get bullish, so I'm just going to read this, all this bullish stuff. It's not too long, so we'll just get through it really quick and then get to the positives and then the technical analysis. So AMC is weeks away from a no-win scenario. On the other hand, I've made it no secret that I'm extremely skeptical of AMC's ability to turn its business around or perhaps even survive over the long run. The way I see it, AMC Entertainment is just weeks away from a no-win scenario, so very, very bullish tone here. Back in March, the company filed a proxy statement with the Securities and Exchange Commission stating its desire to put a number of items to vote by its shareholders on May 4th. Among them is the ability for AMC to issue up to 500 million shares of Class A stock if approved. This would likely double the existing authorization and allow up to 1.024 billion shares to be outstanding. To be clear, AMC isn't necessarily going to issue any new shares, according to Aaron in an interview with CNBC. I'm going to read this interview, all that, but I just want to point out that's basically your equity position would be cut in half if they doubled the share price. So if you have 1,000 shares, if they double it, you only have 1,000 shares, but there is another 1,000 shares that basically replace yours. So your equity value is cut in half, and it's very hard for the stock to move up and down because you need a lot of volume coming in to make bigger moves. So going on, dilution is something we care about, but I would also tell you we are formally asking for approval from our shareholders to authorize another 500 million shares that the company could issue if it wishes. There are a lot of benefits to our shareholders of having board authorized shares out in the market. We will be sensitive to dilution issues. At the same time, though, there's an opportunity to bolster our cash reserves. There's an opportunity to buy back debt at a discount. There might be an opportunity to defray some of our deferred theater rent, settling with stock instead of cash. Maybe there's some merger and acquisition opportunity where we could buy other companies inexpensively using our stock as currency. There are a lot of good reasons for shareholders to give us the authority to have more shares. Now, I just think the way that he put this, right here where he says where we could buy other companies inexpensively using our stock as currency. Now, AMC, as much as I do think this is a viable way to go about it, but announcing it publicly like this, I don't think is good. just because they are in so much debt and they're basically struggling to survive. They're not in the, they need to trim back or do whatever they have to do to cut cost and stay alive until they can use their stock as a currency. So that's like a 50-50 agree and disagree. So while I can appreciate Aaron's cheerleading, it's misguided at best. To think that AMC would consider using its stock as currency, like I just said, to make acquisitions when there's $11 billion in convertible and non-convertible debt on its balance sheet as of mid-February, according to S&P Global Market Intelligence, is foolish with a small f. So I'm not exactly sure what he means by that, but what's happening on May 4th is a no-win situation for Aaron, AMC, and the company's shareholders. If shareholders approve the measure, AMC probably guarantees its survival for a long time to come. However, being given a free pass to double the outstanding share count will put ceiling on the company's share price. Rallies will be met by AMC selling stock into strength and likely crush the hopes of retail investors. Meanwhile, if shareholders vote against the measure, AMC is going to have a very hard time coming up with the capital needed to survive. Having more than $1 billion in cash staves off the company's immediate bankruptcy concerns, but it doesn't do anything to lessen the company's ongoing losses and reduce capacity in its theaters. Plus, with $7.2 billion in debt need to be repaid in 2026, parentheses $6.04 billion of which is traditional and can't be converted to equity, AMC has virtually zero hope of lasting another 5 years without being able to issue hundreds of millions of additional shares. No matter what happens with May 4th vote, there is no good outcome. Approving the share offering would seem the lesser of the two evils because it would at least give AMC a shot at a long-term survival, but with the company's revenue not expected to hit pre-pandemic levels until at least 2024, a return back to low single-digit share price seems probable given the dilution that would be necessary to ensure its survival. So obviously not bullish at all. Words coming from Sean Williams, this guy at the Motley Fool. Now we're going to look at the bullish article and then give you guys my thoughts and just my overall opinion to wrap this up and then get into the technical analysis. This is the bullish article from Rich Dupfree at the Motley Fool, and it is very, very short, so I'm just going to read it to you guys. AMC Entertainment is 38% undervalued, analyst says. The theater operator is also upgraded to a buy over its smart use of an elevated stock price. Although the market didn't like AMC Entertainment Holdings' plan to dilute existing shareholders by issuing 500 million shares of new stock to pad its savings account, at least one analyst on Wall Street apparently isn't concerned. B. Riley Securities analyst Eric Wold upgraded the movie theater operator from neutral to buy and nearly doubled his price target on the stock to $13 per share from $7 per share. That implies he sees 38% more upside in AMC stock from its current $9.36 per share closing on Friday. It's been 2 years since AMC Entertainment traded at a price level so high, if you ignore the January's Reddit-fueled mania, and it was on its way back down then. The theater operator has taken on substantial debt to fund numerous acquisitions and had been spending a lot of money renovating its theaters, upgrading many to a dine-in style to lure moviegoers back in. Theater attendance has been in steady decline since its peak in 2002, and while the release of various blockbusters caused the numbers to occasionally spike, the trend is one of persisting decline. Now it faces the prospects for reducing seating capacity and greater competition from streaming services. Wold, though, says he is looking several years ahead. He told investors in a research note, "We have remained impressed with management's ability to weather the pandemic headwinds by both strengthening the balance sheet and negotiating with landlords to improve the cash runway into 2022. By diluting current shareholders through equity sales, AMC is seizing on the chance to reduce its debt load while the stock is elevated." Wold writes, "With management increasingly signaled the ability and willingness to utilize equity to reduce the debt load, we can now be more constructive on the upside opportunity for the shares." So that is the end of the article. My opinion on both these articles is the Sean guy, the first guy that was saying basically they only have weeks left, and I know he was implying that the deal is supposed to be in a couple of weeks, and that's what he's saying, that basically AMC is down and out. I don't think that's the case. I do think issuing shares will be good just because the share price is so high on AMC. I do think AMC could be undervalued if we get a ton of demand back at the theaters, and especially if they can take some of this debt by issuing more shares. It does suck for shareholders, but if they can use this to pay off some of their debt so they don't have that looming over their head, and maybe downsize the business a little bit, and this might sound weird to some of you guys, but downside the business and then reconsolidate what your plan is for the future, because they have been losing market share for quite a long time to streaming services, Netflix, all this. So they just need to really reevaluate what they are going to do and how to improve the theater experience. I love theaters. I have not personally been back to one, but I do like theaters. I mean, I think a lot of people like theaters, but just 25% capacity right now, where most states are at, is not reasonable to sustain a large company like AMC. But nevertheless, I do think AMC will survive. I definitely think they're going higher, probably to $15, $20 in the next year or so. Just because I do think the demand is here, and these stimulus checks and all this money printing will last years and years, guys. This is not going to be something where people spend all their money in 6 months. No, this is going to last years. People are going to still have stimulus. Stimulus money is still going to be around in 2023, and I would definitely bet on that. Now, let's look at the technical analysis. We are over on Webull, looking at AMC. And first thing that points out to me, we have a strong support level at $9 a share. We've had a triple bounce from here. You see 1, 2, 3, and we're kind of hanging out around this level. So I would say we're on the lower end of our support range. And then if we look at some resistance levels, we do see we topped out $11.21, and we topped out around $11.70. So anywhere from 1170 to low 11s, probably 1150 is going to be our real resistance level. So I'm just going to use 1150. Because I don't think this first one is significant. If we were going to gap up, this is not going to be the level that kind of calms investors down. But just extend that all the way out. I do apologize. Now, it was not too long ago, March 18th, when we were up here around $14.50. So I do think that is a strong possibility going into the future if we get some good news. Now, the good news part, I don't know how much of this is actually going to be priced in. And by pricing in, that means the market looking ahead to see what AMC will be doing and pricing in good or bad news. So they're probably pricing in a little bit of good news. And so when we get that good news, it might not pop the stock the way that it would if we were expecting bad news. So I hope some of that made sense to you guys. I do want to put a small resistance level around here because we have had a lot of action around the $10 mark. You see this where we bottomed out, ripped up, bottomed out, ripped up, and then rip, and then consolidate. So and then kind of consolidating through here. So this is a little resistance level. I don't think $10 mark is too bad. I think that's more of a psychological resistance level. You know, getting over $10 is like we could start getting back up there and people get a little jumpy. So that's kind of what I'm looking at. It does look pretty bearish right now, though. If we do zoom in, hitting lower lows, I mean, you can kind of call this a lower low. We're right here, but lower lows as far as this whole trend line that started April 5th when AMC was at $11.25 has been straight down to the ground. Like I said, hitting lower lows every single time at this base support level, and then this base support level, gap down this one, and then now we're chilling down here. So if I were to imagine we do go down a little bit further to about the $9 range, and I'm just, say we sell off at the end of tomorrow, so that would put us around $9. I do see strong support though around the $9 mark, so I don't think we're going too much under that. I do think right now is a good trade to get in on. Well, this price is a good trade to get in on, and I do think the share offering will be seen as a positive for AMC stock. It could be very bad, it could be very positive, so I would stay mindful of that around May 4th. Now, with all of that said, the conclusion here, at least for me personally, is that I don't like AMC shares for the long term. It's just not my kind of investment. I am looking for the next big things, but I do think there is a trade here. I do think once we bounce off the support level, there will be a very good trade here as far as options, because the call premium should be very, very low after getting beat down for so long. Now, if you guys like my perspective or got anything useful out of the video, consider hitting the subscribe button, like the video, and make sure to comment on your way out. I do respond to every single comment. Now I'm gonna get out of here. You guys take care. Bye.